Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about WORLD KINECT CORP quarterly report. WORLD KINECT Corporation offers a diverse range of businesses and services across three segments: aviation, land, and marine. The company's services include fuel management, ground handling, dispatch services, trip planning, flight planning and scheduling, energy advisory services, supply fulfillment for natural gas and power sustainability solutions, renewable fuel products, carbon management, renewable energy solutions, transportation logistics, marine fuel-related services, procurement of fuel, cost control, quality control, claims management, fueling of vessels, delivery of fuel and fuel-related products. The company also supplies various products such as fuel lubricants, heating oil, renewable energy solutions. The steady decline of WORLD KINECT Corp's stock price over the past year can be attributed to a series of routine corporate announcements, expected financial disclosures, and strategic moves that were either anticipated or balanced by other market factors. The company's third quarter 2025 results, leadership transition, and strategic acquisitions did not cause significant changes in the stock price, as they were mixed outcomes that led to a subdued market reaction. Similarly, appointments to the board of directors, upcoming earnings conference calls, and regular quarterly cash dividend declarations are standard corporate events that typically do not result in stock price fluctuations exceeding 3.21%. These factors collectively contributed to the lack of significant changes in WORLD KINECT Corp's stock price over the past year. The primary drivers of revenue growth or decline in the company's financial performance can be summarized as follows. Revenue growth is primarily driven by the aviation segment, which experienced a significant increase of plus 65.4% in revenue over a 3-month period and plus 15.7% over 9 months. The marine segment also showed moderate growth with a 2.8% increase in revenue over 9 months. On the other hand, revenue decline was primarily driven by the land segment, which experienced a 10% decrease in revenue. The aviation segment also saw a decline of 10% in revenue, while the marine segment experienced a 5% decrease. Other drivers contributing to revenue decline include lower average fuel prices and failure to meet fuel and product specifications. Currency exchange fluctuations and inflationary pressures also had an impact on revenue, but their effects were not as significant as the aforementioned drivers. Net income and profit margins have experienced a decline in recent periods. In Q3 2025, net income decreased from $33.5 million to $25.7 million due to various factors. The gross profit margin also declined from 2.57% to 2.66%, while the operating income margin dropped from 0.73% to 0.67%. The main reasons for this decline are significant goodwill and other asset impairment charges of $443.1 million, an unrealized loss on derivatives of $24.9 million, and restructuring charges of $25.9 million, resulting from a plan initiated in CONE 2025. Additionally, a goodwill impairment charge of $359 million was recorded. These one-time expenses have negatively impacted the company's financial performance. The company's debt level has undergone significant changes. Total debt decreased from $4,775.8 million to $4,433.9 million, while long-term debt also saw a decrease from $796.8 million to $766.6 million. The net increase in borrowings was minus $80.7 million, with repayments totaling $2,281.7 million. However, the interest expenses have not shown a significant change. Although there is an increase of $48.5 million in interest expenses, it is still relatively low, at minus $74.4 million for the period. Additionally, the net decrease in interest expense and other financing costs from $-89 million to $-83 million, 200,000 further, suggests that interest expenses have not changed significantly. The company's financial summary reveals a mixed performance across its segments and regions. The aviation segment stood out as a strong performer, while the marine and land segments lacked detailed performance data. Notably, the North American land business was mentioned as being exited, indicating poor performance in this area. Overall, the company's financial health is varied, with some areas showing promise and others requiring improvement. Management's outlook and strategy. the company's management has outlined several key points regarding the company's outlook and strategy. Despite concerns about inflation, trade-related uncertainty, and market conditions, revenue and operating income have increased for both 3-month and 9-month periods. The aviation segment has shown significant growth, while the land segment has seen slower growth. Management is undertaking a company-wide transformation initiative to streamline the operating model and enhance organizational efficiency and effectiveness. This initiative is expected to result in initial cost savings beginning in 2026, with increased savings in following years, totaling approximately $80 million over 5 years. The company is also focusing on improving capital efficiency by optimizing asset utilization, leveraging capabilities of acquisitions, and realigning its operational platform. A disciplined capital allocation strategy emphasizes portfolio optimization and a sharpened focus on areas aligned with long-term growth objectives. Management believes the company has sufficient liquidity to fund needs for at least the next 12 months and is prioritizing liquidity to fund working capital and make strategic investments for growth. Overall, management's outlook and strategy are centered around driving growth, improving efficiency, and maintaining a strong financial position. Acquisitions and divestitures overview. The company has made several significant transactions in recent years. On the acquisition side, a payment of $51.3 million was made for deferred consideration related to prior acquisitions. In terms of divestitures, the company has sold various businesses and assets to streamline its operations. Key divestitures include sale of UK Land Fuels business Watson Fuels Asset Group within land segment, disposal of operations in Brazil, rationalization of certain assets, and associated personnel within North American land business. These transactions demonstrate the company's efforts to optimize its portfolio and focus on core areas of operation. The company's financial summary reveals a clear indication of its capital allocation strategy. Specifically, it is evident that the company has engaged in share buybacks, as demonstrated by the negative values for repurchases of common stock on page 13 for both 2025 and 2024. Furthermore, the share buybacks section on page 55 confirms this trend, stating that although no repurchases were made during the third quarter of 2025, the company still has an authorized amount and remaining available balance for future buybacks. This suggests a deliberate effort by the company to return value to its shareholders through share repurchases. Concerns about inventory buildup and supply chain disruption exist. Our financial summary reveals 2 pressing concerns that warrant attention. Firstly, there is a notable decrease in inventory value from December 31, 2024 to September 30, 2025, indicating an inventory buildup issue. This suggests that our current inventory levels are higher than necessary, which can lead to wasted resources and reduced efficiency. Furthermore, operating in high-risk locations poses a significant risk of supply chain disruption. This vulnerability can have far-reaching consequences, including delayed shipments, increased costs, and damage to our reputation. Addressing these concerns is crucial to maintaining a stable and efficient business operation. That concludes the financial summary for World KINECT CORP. Feel free to comment below, and I will be happy to answer them when possible.